Chapter 11, Question 9a. The payroll records of Ruston Corporation's District Office provided the following information for the weekly pay period ended December 27, 2019. We have 4 employees working variable hours with an hourly rate that does change per person. We're told the deductions for income tax, CPP, EI, and union dues. We are also told that employees are paid 1.5 times for their hourly wage for any hours worked in excess of 40 hours per week. The company contributes 100% of its share for CPP and 140% for EI. So the first step is to go through and calculate the gross pay for these employees. In this situation, we've calculated Clay York 43 hours, so it's 40 hours at $12 for $480 plus 3 at $12 times 1.5. Equaling 534. We'll go through each of the employees in this manner. So I'll walk through one example. For example, Karen Cooper, she had 40 hours at $15 an hour. So 40 times 15 is 600. And then she had 6 hours at 15 at a rate of 1.5, which is another $135. So in this situation, you add the 135 plus the 600 to get the 735. You do the same calculation for Stephen and Clay. Stevens would be 40 hours at $17. And then you add 8 hours at $17 at time and a half. 204 plus 680 is your $884. The next part we would enter for deductions are we were told the income tax amounts. So that's a deduction by employee. We're told CPP, we're told EI, and we're advised union dues. To calculate the net pay, we take the gross pay calculated by their hourly rates, less the deductions, and we'll get their net pays, totaling across all 4 employees of $2,142. The employer's costs in this situation, we're told it's a 1-to-1 ratio for CPP, totaling $125, and for employment insurance, it's 140%. So I've entered a formula here to round 1.4 times the EI paid by the employees. So that totals $63. The next part of this assignment asks us to create the payroll journal entries for that December 27, 2019 pay period. The first part then is to record the salaries and wages expense, which was a total gross pay of $2,713. So it's a debit to salaries and wages. And then we've got a credit for the deductions. We've got income tax payable of $362 credit, CPP payable of $125 credit, EI payable of $44 credit, and union dues credit of $40, which means the rest is a cash payment because it's paid immediately. Or, actually I apologize, I just read that this is actually salaries payable, because we'll pay them later. I apologize. So that's a salaries payable of $2,142. The next part says to record the employee benefit expenses. So in this situation, we've got the employee benefits expenses total 188, and that comprises the CPP of 125 plus the EI of 63. So it's a credit to increase the amounts of the liabilities and a debit to the expense to record the employer's portion. Last part of this exercise is to record the journal entry to record the cash payment of the payroll liabilities to the CRA or the government on January 15th. So our CPP payable consists of the employer's portion plus the employee's portion of $125 each for a total of $250. The EI consists of both portions, 63 plus 44 for 107. And the income tax payable, obviously only the employee's portion of 362. The sum of all 3 of these items being $719 is the net amount of cash being sent to the government. If you look at my video about problem 12a, we'll actually go into more details on how to calculate some of these deductions.